Hello and welcome to your weekly technical update, your guide to the charts that matter this week. I'm Andrew Gagan. Well, the Australian share market finished the financial year up around 10%. The question now for investors is, can the bull run continue? Jason McIntosh from Motion Trader analyses the ASX 200 chart.
So the ASX 200 is into its third week of consolidation. Made a recovery high earlier in the month, and we're now getting that pullback. What's notable is that this is the longest pullback since the April low. It's not the deepest pullback, that was shortly after the low, but it is the longest time between making those new interim highs on the way up. One of the features of this market over the last couple of months is that it's been stretched above the 50-day moving average. So on the chart, you can see that I got the 50 and the 100-day. The red one is the 50-day. So from that perspective, what we're seeing now, it fits the bill for a typical consolidation. The ASX 200, it got close to that 50-day moving average last week before rallying, but I think there's still a good chance there's some more consolidation to come, and possibly a retest of the 50-day moving average maybe over the next week or so. I think what distinguishes the recent rally to the sort of rallies we saw during 2022, you might remember we've got some really strong rallies during 2022 followed by some big falls. I think what distinguishes the current market from that is that the dips are being actively bought, and we can see that the whole way up. The pullbacks have mostly only lasted a few days, and the fact that this is the longest pullback since April, I think that suggests that the money is still looking for a way into the market. It's been a case of buy the dip, not sell the rally. I think it's a case of the path of least resistance remains up, and from that perspective, I think it's a case of looking for opportunities to participate in the rally.
Well, oil prices have been volatile of late, reflecting dramatic geopolitical events. Now that the Israel-Iran war risk has been priced out of energy prices, Violetta Todorova from Leverage Shares looks at the technicals for Brent crude.
I think volatility is here to remain in the near term. There is strong support arising around $63 for Brent, which is going to act as a strong buying support for the commodity. I believe we will see volatility elevated. For me, the conflict is far from over. We've seen previous episodes in the Middle East, and those conflicts can get extended for a quite long time. This current run that we've seen up to $78 in Brent was driven by fears that the Strait of Hormuz could potentially be blocked, and we've seen overnight signs from Iranian officials that this closure is still on the agenda. So while Donald Trump's speech calmed the markets and we've seen the price really selling off, the conflict, as I said, it's far from over, and I'm expecting to see further volatility in the oil market. So most probably we will see the price trading in a new range between $63.65 to around $78, which is going to support a lot of oil producers if it stays in that range.
Oil producers, including Karoon Energy, Violetta analyses the technicals for the locally listed stock.
Actually see a very good bottom formation on the chart over the past year, and I'm actually getting very comfortable. The previous resistance of around $72 has been broken decisively, suggesting that the 2-year downtrend of Karoon is finally over, and I'm expecting over the next 6 to 12 months to see substantially higher prices. So the stock reached overbought levels during the latest rally, and the RSI reached extremely overbought levels, which points to a potential pullback, which is aligning with the decline in Brent prices. So I'm expecting to see a retest of the previous breakout point at around 72, which for me, it's a great buying opportunity once it gets there. By that time, most probably the RSI will decline and we will see unwinding of the overbought momentum conditions, and I'm expecting to see another rally after that.
And that's it for this week's edition of the Charts to Watch. Join us for more technical talk next week. Happy trading.